Welcome to TradeTheNBA.com. This is John. This report is for the 30th of June, and well, if we go back to the beginning of June, we were, right about where we're at right now, which we closed at the 30.43. Post-market we're already at 57, but we still have a day to go, so who knows, we could be right back in the middle of it. But we knew that during this time period, after we had that peak move and we got our DSC spread, that we started to see that after the fact, the Fed balance sheet had been lightened, so to speak, and this has created our softness that we're seeing. And all they've been doing is playing between the algo levels that we had already pre-established from the positive extreme histograms, our 5K chart that we've been marking for some time, and they've been just moving right in between them all the way through, and it's been quite effective. And if we ignore our little tail right there, the bulk of the action has come back to fill this last dip below the red line from the main body of it right there. The open of that was at 29.83 and our low 29.83.50. So you see how effective they are at maintaining some precision with regard to these things. Now, there's been a lot of talk back and forth, but at the end of the day, the Fed is dictating this early action. The real question will become when they actually start to release more money into the system as opposed to just reserves. And that's really going to be the tick that will create a little chaos in the idea of generating some inflation, and that to really begin the devaluation of the currency. Right now, everybody's sort of happy because it's status quo. Everyone's just throwing money into their system from a reserve standpoint. But as you can see with the recovery situation, it's going to be sporadic because it's just not uniformed in the way it's going to approach the economies. And this is the problem, particularly when you have some areas that are still maintaining shutdowns. This massive increase of cases that everyone hears about hasn't resulted in a corresponding match to hospitalizations and deaths. In fact, some of the places that are in the most severe lockdown areas are reporting the lowest deaths since March. So it's confusing as to what they're doing. This idea that just because you have numbers of infections translates into something horrible. The reality is you're not sending seniors into nursing homes with COVID, and death rates have dropped dramatically because we know that young people aren't suffering in the same way. They just catch it and move on, and that's just the story for them. But here we are with all that, and yeah, you're reading that correctly, 10,000 on the NASDAQ. So what effect on the economy? Traumatic effect on the economy, but not markets, because two different things. And from the euro, maintaining its stability right here. They're just planning to keep it in this range because it's helpful, at least from a U.S. standpoint for now. They really want to spike it at a certain point. Depends on whether or not they adopt that policy before the election or not. They may wait till after kind of situation, simply because it would really distort things. But you could eventually see a euro move to a 150, 160 if they adopt that deflationary construct, and other economies don't do it. So if it's uniform globally, then fine, it works out. The creep of oil, that will also rise because of the devaluation of the dollar. They're not going to suffer, so that will spike that, as well as other commodities, i.e. gold, and we've already talked about that. Not to mention, this is sort of an underplay of some of the world tensions. You've got China in the thick of it. You've got Israel, Iran. There's just a lot of little stuff brewing that you're not hearing much about, simply because it's not about the election. But it may very well quickly become. So that's something we definitely want to be aware of, because those are those unforeseen crazy items that the market isn't expecting that can really create unique situations. So we started off in our pre-market, and we were talking about we were at latest set of resistances that had popped up. We had a couple little positive extremes right there. So the day began where we were starting to create some additional ones dip below the red line, came back down. I had to reboot my entire system, so I had to go back and reconstruct some of the ones down below again. no big deal. But it was, again, a beautiful signal, and I pointed this one out. When you see oranges below the 23%, particularly on a 5K chart like this, they tend to move to the 100% marker. And in this case, that 100% didn't move down, and boom, captured it beautifully. And then we created a series of positive extremes that were pretty close to previous ones. I think we had 3013 before. So 3009, which is where this set of positive extremes starts, pretty darn close to it. And then again up here at 24, we had similar numbers around 26 and that before. So pretty consistent with maintaining those levels as we go through. And there just really wasn't any amount of extreme sell going through here. In fact, get the sell turned around to buy configuration pretty darn quick right off that previous positive extreme after dip below the red line, and boom, that just brought us right back to the highs, which stayed good until this DOC spread right over here. And that was a fairly decent sigma event that took place with that, and it came right back to that exact same algo, supported right along, and then it created the end of day, boom, and that's where the market is right now, and they're going to take advantage of that after hours setup. Again, some of the best times ever to be an active trader in this particular case. This is where the only stability, I think, for people as far as jobs and business, because you really can't take that risk right now with the instability of the startup and, of course, the election, protests, COVID stuff. The market is where it's at for the returns. So this is where having your indicators is critical to being in the right spot. So we've captured all this quite beautifully. So very exciting stuff. I'll be sending out indicators potentially as early as pre-market, just so that you'll have them, because we're going to be starting up the new month midweek, and I want to make sure you've got everything so that when the market closes, you'll have those to load up. You will notice your change in the power mode 2 will be a darker blue as opposed to Azure. I'm still going to call it Azure, but I made it darker because in some people's systems it wasn't showing up dark as dark. Another alternative you can do, what I typically will do for you guys visually on the charts as opposed to the way they start out, I'll go to format and pick the line and increase the weight to usually the secondary one, and that just brightens it up, makes it a little bit denser, makes it easier to see, I think. So that's just preferences. Same thing on DOC on all those. That's why they're darker when you look at these videos, because I've made them a little bit wider than the standard first line. So you can make those adjustments as desired. As always, though, I will keep updating you with any new details and get those sent out. So make sure you get your renewals in. As always, though, trade well. We'll talk to you later.